Vanessa Muscarà, you are Head of Research and Strategy at Europa Capital. Thank you for joining us on BiTV.
Thank you for having me. Good morning.
Europa Capital recently published its 2022 Outlook report titled Paradigm Shifts in Europe. What are some of the main shifts to be experienced on Europe's commercial real estate market?
Yeah, so I've been asked this question quite regularly recently, and I sort of start to answer the question in sort of a bigger picture, in the sense that I think it's not only sort of real estate that's changed in the past 18 months, but also our professionals and the skills required of us in the built environment. So what I always start explaining, maybe it's just me pondering the sort of research I've been doing in the past 18 months, is that compared to my 15 years experience, the last 18 months has been less about forecasting, so taking historic data and projecting it forward, because historic drivers are very different. And it's more a question of identifying structural trends or paradigm shifts, as you well said, and then working with the asset managers and acquisitions teams to mitigate the risks around investing in these ever evolving. Getting back to your question, so what I cover in the paper is I just look at the traditional property sectors one by one and discuss the structural trends that are impacting the performance. So looking at, I think I start with logistics. So with logistics, I just sort of make the point that traditional forecasting models that used to forecast the logistics sector were mainly driven by GDP or economic growth. And now we're seeing more of a focus on online sales or e-commerce, and there the story is common. I think there's industry consensus that logistics occupational demand is being driven by online sales, so no surprises there. But what we're also seeing is institutional stock, so anything over 10,000 square meters, located regionally or on the edge of urban centers, that stock is now also green certified and also certified with WELL certification. So I think it's Dutch warehousing which is actually leading the way in this sense, because 26% of the stock that has been delivered in the Netherlands since 2018 is actually WELL certified, which says a lot about occupiers trying to retain and attract talent. And it's usually a certification which is associated with offices. So that gives you a sense of how our industry is changing. And then I believe in the paper I go on to talk about offices, and even there, the industry consensus to do with the supply side of the story is broadly, I think, in line with the rest of the industry, meaning I just highlight that unlike following the global financial crisis, the supply-demand fundamentals are much tighter this time around, meaning that the future pipeline is much lower than the historic net additions to stock. So that's a good thing. It's a good time. The pandemic was a good time from a systemic shock in that sense. And then I go on to saying that going forward, offices will be less about location, and more about data analytics, ESG, well-being. And we have a separate paper which was released earlier this year called Reshaping the Workplace, where broadly we conclude that if your occupier thrives, then your asset or office portfolio thrives with you. So all this in the context, I guess, of the traditional sectors being retail and offices, what we're seeing is shortening lease lengths. So real estate, I think, will remain an asset class that is driven by income, but in the context of leases getting shorter, then there's more of a focus on going from being a passive manager to an active manager, and looking after what we now call customers, used to call tenants, and making sure they have the right amenities so that they are encouraged to stay longer. And I think the last sector which I look at is the living sectors. And even there, I start off by highlighting that the EU Parliament convened earlier this year, and they passed a resolution highlighting that that housing is a fundamental human right, but we just don't have enough of it. So across the EU 28 countries, the EU Parliament argued that over 10% of the population now spends 40% or more of their disposable income on mortgages and rents. But so clearly there's a supply gap opportunity there. But on coming back to your question about paradigm shifts and structural changes, we now live in a world where technology is allowing us to live, work, and play more flexibly. And so one thing I guess to note is that housing going forward will also require adequate spaces to work.
And also something that I took from your report, you note that opportunities are to be found both through core and value-add strategies. How do you see investors creating value in 2022? As we know, a lot of yields are compressing, and there is a lot of competition on the core front. Well, I don't. How can investors expect to create value?
Yeah, so on the core side, I think I started off by highlighting that at the beginning of the year with the INREV Investor Intentions Survey, that as a result of the uncertainties that we're seeing in the market, I think INREV, they survey about 100 or so investors, global investors, multi-asset investors every year, representing an AUM of over 600 billion or so, and they were looking to deploy capital, 50% or more of their capital, towards core strategies. So a definite shift towards risk-off approaches. This is a survey that's conducted once a year, and I suspect when it comes out next month, it will broadly show a similar picture, given where we are. You and I, at least I'm at home. I'm not sure where you are, but and so in terms of fueling or understanding where that core product is coming from, what we're seeing is a real increase in core funds, part of the Odyssey Index, the open-ended core funds, part of the INREV universe, and they've just grown exponentially. I think they reached an AUM of 40 billion GAV, so each fund is about 2.5 billion on average, which compares favorably to an average INREV fund of about 800 million. That's including the opportunistic and value add funds. So you're getting far more diversification by geography and by sector. And investors can also be at peace of mind that you can have, they're governed by limits to do with debt. So that's the core opportunity there. And then in terms of the value add opportunity, we've been monitoring capital values of core and non-core property at the all property level and also by sector since the start of the pandemic. And what we found is that core assets have actually held up well, as opposed to non-core assets, which have fallen, capital values have fallen by about 10%. So we see that for our value add funds as a twofold opportunity. The first is that we're able to reposition assets to reflect the paradigm shifts, which we were talking about earlier, but also to realign them with their net zero carbon pathways as well, be it energy or decarbonization.
Yes, because that's a good segue for my next question, because that's something very important in your report as well. You stress the importance for investors to factor in net zero carbon goals in their strategy. Therefore, maybe how do you see the impacting? How do you see this? Impacting the European commercial real estate going forward? How do you see this new consideration or this enhanced, maybe is the better word, consideration for net zero carbon impacting strategies going forward?
Yeah, that's a really good question. I mean, the Paris Agreement, the commitments of the Paris Agreement are mandatory, and they need to be achieved by 2050, which is round the corner. Yes. And what we're seeing in the market is core strategies are starting to sell their assets, or in this context, meaning that those that have done their net zero carbon appraisal and worked out that they, through core strategies, which being stabilized can't take as much risk as some of the repurposing or retrofit strategies that value add strategies can.
Sadly, that's all the time we have, but thank you very much for this expertise, and thank you all for joining us. See you soon on BiTV.